Good afternoon, everyone. Welcome to 27th session of Zentax Talks. So here we have CA Akshara, our expert at Zentax Talks, to solve all our queries. Also, due to an immense response for our session last week, we are once again back with your questions and our answers. Also, put up your questions regarding GST documentation and compliances, and we are here to answer all your queries. Yes, Akshara, over to you.
Hello, everyone. A very good afternoon. Actually, people are joining, so let's wait for another 2 to 3 minutes to start the section. Thank you.
Good afternoon again, and welcome back to session 27 of Zentax Talks. As mentioned already, we are back with the topic GST documentation and compliances, and we will be answering all your questions during this session. So, sorry, we've been seeing messages saying no voice. Are we audible? Can someone confirm we are audible? Okay, thanks. Yes, as mentioned already, we are back with the session on GST documentation and compliances, and we'll be taking up all your questions. So we'll be starting with some questions that we've all received already through mail, WhatsApp, and etc. Do keep posting your questions in the chat box. We'll start taking them once we get done with these questions. So the very first question is, I am registered under the composition scheme in GST. I am aware of maintaining proper records for the sale and purchase of goods. However, I am not sure about the maintenance of the stock register for the sales and purchases. So please give clarity on how to proceed further.
Okay, a very good afternoon, everyone. I've seen some of you asking why the session is late, because the people were joining, so that we thought we could wait for some time. So that's why we've started late. And coming to the question that Divya Prabha has asked. So the question is all about the composition scheme dealer under GST. So when it comes to maintenance of records, the rule 56 talks about the maintenance of accounts by the registered person. So the rule 52 completely tells about a registered person, like what and all documents or books of accounts he has to maintain. So in this rule 56, that too specifically subsection 2 specifically talks about the stock register. So if you see that rule, it will start with the, every person's other than the persons paying tax under section 10 has to maintain the record of stock. So if you see, the section 10 is all about the composition dealers, that is whomsoever is paying tax under composition scheme. So as a rule specifically mentioned that a composition dealer need not maintain the stock register. So the stock register, the composition dealer need not maintain the stock register. So every other persons other than composition dealer has to maintain the stock register. So in the stock register, we all, like, as we are all aware, we have to maintain the opening balances, like how much, what is the receipt and how much we have supplied. So in case of it, the goods are lost, or if it is stolen or destroyed, as we all know, and if it is written off also, that also has to be mentioned. And say if you are giving it as a free sample or gift, that also has to be accounted in the stock register. And we have to maintain the balance, like how much is the balance. So basically, as a stock register, you have to maintain all of this, but the maintenance of stock register will not be applicable for the composition scheme dealer.
All right. Hope you've all got that composition dealer. For a composition dealer, it's not mandatory to maintain a stock register. Moving on to the next question. The question is, as a transporter of goods, what are the documents to be maintained by me during transportation of the goods? And is it enough if I have a photo of the documents with me?
Okay. Coming to this question, it is about, as a transporter, what are the documents I have to maintain? So if you see rule 138A talks about particularly the details, the records, the documentation that the transporter, the person in charge of conveyance, has to maintain. So if you see, whenever there is a movement of goods, an e-way bill has to be generated. So whenever a transporter is transporting the goods, he has to particularly generate, he has to carry the e-way bill along with the supporting documents. So it can be either a tax invoice or a delivery challan, the documents like that. So whenever a person in charge of conveyance, he has to particularly have that those documentation in hand. So to answer this question, is it enough if I have a photo, is what the question has come. So when it comes to vehicle detention, or whenever there is a vehicle interception, so when the department officials specifically ask for the copy of an invoice and the e-way bill. So so it all depends on the person, like whomsoever is intercepting the vehicle, if they accept the photo. But on a legal perspective, you can maintain the documents digitally as well. So if you have the digital documents itself, they'll be accepting that. So if we have a photo, it is advisable to have a digital copy as like a PDF or something like that, as a document to substantiate that you are carrying the proper set of documents in relation to the movement of the goods.
All right. Moving on to the next question. The question is, we have been maintaining the documents required under GST manually till date. However, we are unsure of the quality of the documents. Should we shift to electronic storage of documents? If yes, is it still necessary to maintain the physical documents with us? Also, please clarify on how long to maintain these documents for.
Okay, to answer this question, the rule 56 specifically tells that the documents that has to be maintained need not be, it can be in the electronic form as well. So if you are planning to convert your physical documents for the issue of quality into electronic, it is well and good. You can carry the physical, I mean, you can have the electronic documents. So whenever it is in electronic documents, it is, you must have a digital signature attached to it so that it is legally valid. And for to answer how long the records has to be maintained, so it is basically 72 months, that is 6 years from the last date of filing the annual return. So basically, whenever there is when it comes to the how many period, like, or how many years should I mention, I mean, should I keep the documents? So it is basically 6 years from the date of filing of the annual return. And yeah, that's it. So whenever like you want to shift it to electronic storage, it can be done. So whenever there is for the documentation purpose, or where you have to keep the books of accounts or records, it has to be kept in the registered place of the business. So it there is also common doubt that should I keep the books of accounts only in the principal place of business, or it can be in like any other registered place of the business. So to that specifically, Rule 56. Clause 16 tells about where it has to be maintained. So every place of business in relation to that place of business, or that registered place of business, you can maintain that documents in that place of business. So it should be, it's not necessary that it has to be in the principal place of business only.
Great. Hope all of you got the question clear. So the next question is, due to the recent floods in Tirunelveli in December 2023, all of my records were lost or destroyed. Will I be liable to penalty under GST?
Okay, I think this is an important question. So we are all aware of that. In December 23, there have been floods in Tirunelveli. So due to that, if the question has been posed like, if all of my records were lost or destroyed, will I be liable for penalty? So there is no like specific provision telling, any circular or specific provision telling that. So if books are lost by means of flood or any unprecedented events, so the penalty will not be imposed. So when it comes to maintenance of books of accounts, the penalty provisions or the provisions that is applicable for the non-maintenance of books of accounts will be applicable in this case as well. So the section 73 or 74, the proceedings of that will apply for non-maintenance of books of accounts as well. So if it is in case of the floods, maybe we can talk to the department officials telling that because of flood only we have lost it. But even though in that case also, if we have electronic documents, or if it is maintained in e-documents, that can be given as a proof. So it all depends on like how we convince the officer. But generally the clause as that, the provision that applies for the non-maintenance of books of accounts will be applicable in this case as well.
Great. So just to be safe, all of you start maintaining your records electronically. So moving on to the next question. I am currently paying tax under composition scheme. However, soon I would be liable to pay tax under normal scheme. what are the records that I should maintain to prepare for the same?
Okay, I think this question is something similar to the first question that we have discussed. So, as a composition dealer, the first question was completely relating to the stock register, and here it is all the books of accounts. So, even if it's a composition dealer, all the books of accounts has to be maintained. And as you have mentioned that you are planning to shift from the composition scheme to the normal scheme. So, when you are shifting from the composition scheme to the normal scheme, you'll be claiming the ITC. For that purpose, at least you should maintain the documents like prior to 1 year, all of the documents that for which you'll be claiming the ITC as well. So if even if you're shifting from the composition scheme to the normal scheme, it is advisable to maintain your books of accounts.
Great. So going to the next question. We are using the transportation services of both registered and unregistered transporters. Are there any differences in the documents to be raised by us while sending goods through either of them?
Okay. So you mean to tell that transportation, the person whomsoever is the transporter, if he is registered or unregistered, what are the different documentation? So whenever there is a transporter, if he is unregistered, he has to get registered himself in the e-waybill portal. There will be a transportation like transporter ID. So based on that, from the e-waybill portal, you can take the goods, like you can carry the goods whenever there is a movement of the goods. Whenever the transporter is unregistered, like you should be having the transportation ID registered from the e-waybill portal whenever the transporter is unregistered.
All right. Moving on to the next question. We have received discounts from our suppliers for making early payment. Should we raise an invoice on the supplier, or should the supplier give us a credit note? If the supplier is providing a credit note to us, what should we do?
Okay, so I understand this question is relating to the cash discount. So whenever, as we see in the normal trade practices, so whenever there is an early payment, there will be a discount. So if it is a discount, we have to check whether the discount is properly accounted in the invoices. So in this specific scenario, the supplier, you have mentioned that supplier is giving a credit note. So in this scenario, there are two possible situations. It can be either a GST credit note, or it can be a credit note relating to a financial credit note or a commercial credit note. So as we are all aware, the financial credit note or the commercial credit note will not have any GST portion in that. So whenever there is a discount that is given before the time of supply, so here the valuation of the supply, section 15 subsection 3 will apply. So as we are all aware that if discount is given before the supply, and whenever there is GST credit note, we'll have to reverse the ITC. So if there is no GST credit note, only financial credit note is given, that shouldn't be a problem. But answering to the specific question, should I raise an invoice to the supplier? So in this case, the supplier is giving you discount, and you need not necessarily raise the credit note. The credit note will be given by the supplier. So in this situation, you need not raise a credit note. Whenever the credit note is given by the supplier, so we can see if it is a financial credit note or a GST credit note. If it's the GST credit note, that has to be ideally shown in the GST returns. If it is a financial credit note, it has no relation with the GST aspect.
I hope you've got it clear that you need not raise an invoice when your supplier is giving you a discount. Moving on to the next question. Is it not enough evidence if our supplier has properly filed his GSTR 1 by providing details of all the invoices raised by him? Or is it mandatory to maintain both the original copy and Xerox copies of the invoices from the suppliers? And for how long should we be maintaining the same?
Okay, so I can see that many of you are asking like how long should I maintain the records, or how long should the documentation be? So as per section 36, it has to be maintained for 72 months, that is 6 years from the date of filing of the annual return. So that we can be very clear, it has to be maintained for the 6 years. So here the question is specifically about if the supplier has properly filed GSTR1 or it is mandatory to maintain. Okay. So you have asked whether it is mandatory to maintain the original copy as well as the Xerox copy. So it is not necessarily, or it is not provided anywhere that you have to maintain both the original copies as well as the Xerox copies. So whenever there is a departmental audit or whenever there is a need to submit the copies of the invoice, it is not necessarily that you have to submit the original copy. You can submit the Xerox copies as well, the photocopies. So you can talk to the department officials, or you can produce to them the Xerox copies as well. So it is not necessarily that you have to submit only the original copies of the invoices.
Great. So moving on to the next question. We have purchased from SEZ unit and claimed ITC with a copy of bill of entry. However, the bill of entry is not reflecting in GSTR2B. Should we reverse the ITC claimed now?
Okay, I think the same question I would have answered in the part 1 by Aravind sir. So whenever there is a supply relating to SEZ unit, it is considered as an interstate supply. So whenever there is a purchase from the SEZ unit, there is no necessarily that there is a tax invoice. So it will be obviously accompanied by a bill of entry. So that bill of entry may not be reflecting in GSTR 2B. So when we look at the conditions to claim ITC, that is 16 subsection 2, the clause AA was inserted telling that any tax invoices or debit notes or credit notes. So it does not specifically talks about any other document other than the tax invoices. So the bill of entry will not be covered under that. So even that is not reflecting in GSTR 2B, you can claim the ITC based on the bill of entry that you have. That we can be very clear on that aspect. So whenever there is a bill of entry, even if it is not reflecting in GSTR 2B, we can claim the ITC based on the bill of entry. And there is no need of reversal of the ITC claimed earlier based on the bill of entry.
Yeah, hope the answer is clear. The next question is, can we send goods with manual invoice and e-way bill while e-invoice is applicable to us?
Okay, so this is, I think this is a basic question relating to the e-invoice. So whenever an e-invoice is applicable, that is my turnover has crossed 5 crore, I'm mandatorily I should generate an e-invoice. So whenever an e-invoice is applicable, the manual invoice or a the invoices which is not an e-invoice is not even considered as an invoice. That is the provision tells us. So whenever an invoice is applicable, you should generate an e-invoice. So here you have particularly asked, can I send the goods with e-way bill and a manual invoice? So I can tell you very clearly, sir, because whenever there is a vehicle interception, this is a major concern. So you cannot have only the manual invoice. If the invoice is applicable to you, obviously they'll hold off your vehicle telling that e-invoice is applicable. So you cannot take the goods only with the manual invoice that you have. You must generate an e-invoice along with your e-way bill. So if you have not generated, obviously they will initiate section 139 and they will be in possession of penalty.
So going to the next question, we have paid customs duty and IGST through a manual bill of entry and paid the tax online. However, the IGST paid details are not reflected in GSTR 2B due to the manual bill of entry not being integrated with the GST portal. We do have a valid bill of entry and tax paid challan. Can we claim ITC against such documents without the IGST being auto-populated, but only through manual entry of IGST in input table of GSTR 3B? I think this is a follow-up question, but still go ahead, Akshara.
Yeah, I think this is the same question that we've discussed earlier. It is all relating to the bill of entry. The same question is that if the bill of entry is not reflecting in GST 2B, can I claim ITC based on that? If it is not reflecting. So we're telling it again. So in case of bill of entry, it is not necessarily that it has to be reflected in GST 2B. Even though if it is not reflecting in 2B, we can claim the ITC based on the bill of entry that we have.
All right. So the next question is e-invoicing applicable to ISD invoices?
So when it comes to ISD, it is basically about the distribution of input tax credit. So for an IST invoices, it is not necessarily that invoice will be applicable because invoice will be applicable because the IST issuing invoices is not necessarily an tax invoices. So the invoicing provision will not be applicable in this case.
Great. So the next question is, we are carrying out works contract business and issuing e-invoice. Our doubt is regarding revision of original bill, how to amend the invoice. I think we'll get back to you with this answer, sir. Moving on to the next question. I had sent goods on demo with the DC and e-way bill, but officer is demanding tax invoice and levied penalty on the same. What is to be done? Is the officer correct?
Okay, so whenever there is a movement in goods, it has to be necessarily accompanied by the e-way bill and the main document. That is, it can be a tax invoice or a delivery challan. So as you have mentioned, you are sending the goods for a demo or a trial, and you have a delivery challan and e-way bill. But the officer is demanding your tax invoice. So whenever there is a demo or a trial, so ideally there is no supply in this case. So if you see the rule 52, it talks about the transportation of goods for the reasons other than by way of a supply. So your case will be covered under this. So it is not necessarily that a tax invoice has to be accompanied for this purpose. So it is just for the purpose of demo. So only when it is for the purpose of demo, it is for the reasons other than by way of supply. So if the officer demands you, you can quote this rule 55C, sir. You can tell that it is for transportation of goods for the reasons other than by way of supply. So whatever you have did is completely the right procedure. It has to be accompanied by a delivery challan and the e-way bill. So the officer cannot demand you a tax invoice on this, and he cannot levy penalty on the same.
Hope the answer is clear. Moving on to the next question. We'll take up a question from our live audience. The first question is, what are the documents required for GST registration?
Okay, so for the documents required for a registration, it is all about the basic details. So whomsoever is applying for the GST registration, so we'll have to see the status of that, if he is a sole proprietor or a partnership firm or a private limited company. So the basic document would be the PAN, permanent account number. So based on that, the GST registration will be started. So the basic document will be the PAN number, and you'll have you should have the valid document for the place of business. So if you are registering a particular place of business in the GST portal, you should have a valid document for that, because in the recent times we see that a registration gets cancelled only because of the mainly because of the place of business registration. So let's make clear that we have a valid proof. For that, we can submit the EB bill copies or either property tax receipt you can submit. You can also submit the rental deed. If it is a rental place, you can submit the rental deed. If it is own place, you can submit your own document. So that will be the basic document that you require for GST registration purpose.
Great. So the questions asked by Mr. Tangaraj, sir, could you please elaborate on your question? It's not clear. So moving on to the next question. We missed showing credit note in GSTR 1 and 3B in the month of March 2024. This came to our notice in the month of May 2024, but we don't have sales up to the level of credit note in the month of May 24. How should we handle this?
Okay, so sir, you are telling that the credit note was issued in March 24, but you came, like, you were aware of this in May 24 only. But I can understand that your sales is not that much, but your credit note is only huge, like when compared to the sales. So what to be done in this situation? So in this case, your sales will become negative. So when it comes to the credit note, you can report the credit note in the GSTR 1 as well as in the GSTR 3B. I think in the GSTR 3B, it will accept the negative values. So you can check on that, sir. So whenever you came to whenever you are aware of this credit note, you can report that credit note, because when it is relating to the previous financial year, it can be reported in this financial year as well. So keeping on that timeline in mind, we can report the credit note as well in the month of May 2024.
Great. Hope we answered your question, sir. So the next question would be, we are receiving credit note from our suppliers for rebates without GST. Is it correct? We'll answer this question in a short while, sir. Now moving on to the next question. Foreign companies executing a project in India for which my client is providing technical support to the said project under a service contract with the foreign company. My client has received an advance payment from the foreign company at the execution stage itself. Should my client raise a tax invoice now, or what other documents should be raised at this stage? And the second part of the question is, also my client has executed a service contract in Indonesia and has raised an invoice for the same without GST. Is this a zero rated supply, or should we charge GST for the same in the invoice?
So here the question is about the advance payment that we have received. So we have asked that is this zero rated supply, or GSTs will be charged on the same as well. So whenever there is an advance receipt, we are all aware that advance for goods will not be GST will not be applicable. For advance receipt for the services, you will have to pay the GST on the same. So here you are telling that you have received an advance at the execution stage itself. So when you have received an advance, so it is not necessarily that you must issue an invoice for that. So you can issue a voucher for the same. Only when it is advance for the services, you'll have to pay GST on the same. To answer to the second question, whether it will be considered as a zero rated supply, if it is an export, for an export of services, it has to satisfy the conditions specified under 2 subsection 6 of the IGST Act. So it tells that, as we are all aware of it, the supplier has to be located in India, the recipient has to be outside India, the place of supply is also, it should be outside India, and the payment should also be received in the convertible foreign exchange. So if all of these conditions are satisfied, it will be considered as a zero rated supply. So let's check on to these conditions and see if it is considered as a zero rated supply or not.
Great. Moving on to the next question. What are the documents that can be maintained as a proof of export for export business under GST? I think we touched upon this question a little bit, but still, yeah. Could you repeat the answer, Akshara?
Okay, so what are the documents that can be maintained for exports? So when it so I think the question specifically talks about the merchant exporter as well. So whenever there is a merchant exporter, they can pay the GST at the concessional rate of 0.01%. So when you are paying tax at the concessional rate of 0.01%, what are the documentation that you should maintain is what the question I could understand. So exporter as well.
All right.
When it comes to documentation relating to exports, it has to be based on you will be having a bond, or like export will be categorized into 2 categories. That is export based on a letter of undertaking, that is LUT, or it will be with payment of tax under IGST. So based on that, we can maintain the documentation.
All right. So the next question is, please let us know if we can generate e-way bill without transporter's GST in, or I think the question goes on to say if we can generate e-way-bill without the transporter's GST.
Yeah, we could understand that the question is specifically talks about can I generate an e-way bill without the transporters or GST? So as far as we've known, so there is an option as we've discussed earlier as well for the transporters. If they don't have GSTN, they can get themselves registered in the e-way bill portal, and you can get the transporters ID. So based on that, you can generate e-way bill and you can cause movement of goods.
Great. So the next question is it valid to transport goods with a valid e-way bill but without a delivery challan? What are the consequences of not having a delivery challan, or if there is a delivery challan, there is a mismatch in details between the e-way bill and the delivery challan? Also, what to do if the e-way bill expired in the middle of transportation?
Okay, so I think there are two questions in this. So you're asking that can I transport the goods with an e-way bill but without a delivery challan? So as we have discussed earlier, Rule 138A specifically talks about what are the documents that you should possess when you cause the movement of the goods. So that specifically tells you should be having an e-way bill, and for that you must be having a parent document, that is, it can be an invoice or it can be delivery challan. So you cannot just like that transport the goods only with the e-way bill. So if it is supply, you must be having a tax invoice, or you are transporting the goods for any other reasons other than supply. Say it is for an exhibition purpose, or you are sending it for a job worker. So in situations like that, you must possess a delivery challan. So whenever there is a movement of goods, there should be a delivery challan as well, and there should be an e-way bill. So you cannot transport the goods only with the e-way bill. So you have asked that also, what will be the consequences if you don't have the delivery challan? So if you don't have the delivery challan, and if your vehicle is intercepted, there are 100% chances that the penalty will be imposed, because that is a basic documents based on which you should be transporting the goods. I can also see that you've asked another question relating to this. If the e-way bill is expired in the middle of transportation, so if the e-way bill is expired in the middle of transportation, or if there is a vehicle breakdown, you can extend the validity of e-way bill in the e-way bill portal, and then only you can further move the goods. So whenever there is an e-way bill expiration, you should extend the validity of the e-way bill in the e-way bill portal.
Great. So the next question is, can returned goods be transported just with an e-way bill and without a credit note being generated when the recipient hasn't even received the goods but returned them outright? Does it make a difference if the recipient had received the goods and then returned?
Okay, so here the question specifically talks about the return of the goods. So we have asked, whenever there is a return of the goods, say if you are transporting if it is an outward supply, you are a supplier and you are transporting the goods. Before the goods have reached the recipient place, what if the recipient has rejected the goods and you have to you have to take the goods back to your place of business? So in this case, under the GST regime, so we don't have the concept of there is no cancellation of bill. So whenever there is a return of goods, you must raise a credit note for that. So whenever there is a sale and you are returning it back, and whenever there is a return, it has to be accompanied by the credit note. But here, as you have specifically asked, whether if the goods are returning without even reaching the place of the recipient. So in this case, you can cancel the invoice as well. But if the goods has reached the recipient place of the business and then only they have returned or rejected, it is mandatory that you raise a credit note for that, and you declare the sales as well as a credit note in the GST portal.
Moving on to the next question. What is a consignment note? Is it a valid document that can be used to generate an e-way bill?
Okay, so this specifically asks about the consignment note. So consignment note is basically the document that GTA service provider will be having it. So whenever there is your GTA to term the transportation service provider as a GTA, the consignment note is a must. So whenever there is a transportation of goods or whenever this is service provided by the GTA service provider, he'll be issuing the consignment note to tell that the goods have been received like that. So the consignment note, so it the e-way bill generally has no link with the consignment note. Consignment note is specifically relating to the GTA, and e-way bill will be generated whenever there is a movement of the goods. So based on a consignment note, you cannot generate an e-way bill. So as we have been discussing repeatedly under Rule 138A, so what are the basic documents that we require for the transportation of goods? That documents, a set of documents should be mandatorily there. So whenever there is a movement of the goods, so e-way bill has nothing to do with the consignment note. Consignment note is completely a different concept, and e-way bill is completely a different thing.
You've got the answer. The next question is, what are the documents required for goods meant for sale on approval basis for which delivery challan was issued by the supplier? That is, person in charge of the goods could only produce a delivery note, which was not a valid document for movement of goods.
So I think this is a repeat of the question that we have answered earlier. So whenever there is a movement of the goods for the reasons other than supply, this is on sale on approval basis as well. Whenever there is a goods sent for a job work as well, so it has to be accompanied by a delivery challan and e-way bill. So the delivery challan will be a valid document. So whenever there is no supply, that is without a tax invoice, you can send the goods with the delivery challan and e-way bill. That will be a valid document. I think we can take up the questions from the audience.
Okay, so the next question is, we are passing the schemes amount received from our suppliers through credit note without GST to our customers through credit note, whether we have to charge GST or not.
So, sir, I think you are talking about the discount perspective. So this also we have discussed earlier. So whenever there is a discount, so whether GST credit note has to be issued or financial credit note has to be issued. So for that, you're telling that we are passing the schemes amount received from the supplier through credit note without GST to our customer through credit note, whether we have to charge GST or not. So you are telling that you have received the discount and you are passing it on to your recipient, if I'm not wrong. Can you please elaborate on this question, sir? Because whenever there is a discount, we'll have to see whether there is a prior agreement for the discount or if there is no prior agreement for the discount. Based on that, we have to check whether we can issue a financial credit note or a GST credit note. If GST credit note is issued, then obviously you have to reverse the ITC based on that.
Okay, the next question is, issue is about ITC. My client account is showing ITC balance about nearly 1 lakh, but while filing 3B, it is telling there is shortage of funds.
So I think this is more of technical or a procedural aspect. So you're telling you have ITC of 1 lakh, but when you're filing 3B, it tells that there is a shortage of funds. I think obviously you would have checked the under which heads the ITC is available. So you can check if there is any cross utilization on that, or else if you have the credit in all of the heads, and then also you're not able to file the GST returns, I think you can contact the help desk or you can raise a grievance on that. If you have still query on this, you can contact us. We'll be ready to help you.
So the next question is, I generated e-invoice, but GSTN was wrong and 24 hours completed. So can I generate credit for wrong bill and generate credit note?
Okay, so whenever any invoice is generated and 24 hours has lapsed, so you are asking that question. So in that case, you can raise a credit note, sir, and you can generate a fresh e-invoice.
All right. The next question is, in case of goods sent on sale on approval basis and recipient is not known, to whose name should the e-way bill be raised?
So in case of e-way bill, you are sending the goods on sale or approval basis. So in the e-way bill portal, generally you'll have the various divisions under which you can generate an e-way bill. So you'll have a separate line item, like if it is a line sales or like that, you'll have a separate line item telling that e-way bill for the line sales. But if in case of approval, if you're not aware of to whom you're sending the goods, you can raise the e-way bill in name of the unregistered person and you can move the goods.
Okay, moving on to the next question. An advance is received by a supplier for a service contract which got cancelled subsequently. The supplier has issued receipt voucher and paid the GST on such advance received. Whether he can claim refund of tax paid on advance, or is he required to adjust his tax liability in his returns?
So I think the question is all about the supplier has received an advance, but eventually the contract has cancelled. So you have received the advance, but the contract is cancelled. So in this case, how it has to be dealt with. So I think we have a particular circular specifically addressing this situation. So the circular is 137. So if we see that, in case where you have received an advance and the contract is eventually cancelled, you will have to issue a credit note for that. So you should declare the credit note in the GST returns as well. But in case whether you're if where there is you don't have any output tax liability against the credit note, you can apply for a refund as well under the category excess payment of tax. Sir, for this specific situation, you have this particular circular. Please refer to this circular 137/7/2020.
We've answered your question, sir. The next question is it mandatory to file ITC 04?
Okay, so ITC 04 is one document whether you like this is a basic doubt all of you have, like all of many of the people are asking whether ITC 04 is mandatory. Yes, ITC 04 is mandatory. ITC 04 will be filing whenever we are sending the goods for a job work. So there will be three situations where you'll be filing ITC 03. So whenever you are sending the goods to a job worker, and whenever there is the job work is being done and you're receiving the goods back from the job worker, and if there can be another situation where the job worker or is directly selling the goods to an customer. So ITC 04, when it comes to whether it is mandatory or not, yes, it is mandatory. So as of now, you'll have to file the ITC 04, even if you have not filed for the previous tax regimes. So we will be advising all of the taxpayers, if ITC 04 is applicable, please do file the ITC 04 on time, because there will be penal provisions, even if we don't have any penal provisions right now. Whenever there is a departmental audit or whenever you get the notices, there are penal provisions if you don't file ITC 04. So as we have been dealing with notices regularly, so for the earlier tax periods and all, they've not asked about ITC 04, but now on they've started bringing out this concept of ITC 04. So if it is not applicable, they are raising the penal provisions. So let's be very clear that ITC 04 is mandatory and you'll have to file the ITC 04.
Hope the answer is clear. The next question is, we are a trading company. We supplied the samples to interstate client through delivery challan and e-way bill. When the sample gets approved, we raise the e-invoice mentioning the same e-way bill. Is this treatment correct?
Okay, so I can understand that you are sending the samples. So whenever you are sending the goods for the samples, so as we have discussed, you will be carrying a delivery challan along with an e-way bill. So what if the samples got approved? So you are asking that whether we can raise the e-invoice mentioning the same e-way bill. Sir, I can see that it gets approved from the recipient place. So when it gets approved from the recipient place, there is no necessity to generate an e-way bill. So the e-way bill will be generated only when there is a movement of the goods. So once when it gets approved in the recipient place, if e-invoice is applicable for you, yes, definitely you should raise an e-invoice. So there is no applicability of e-way bill in this scenario, but e-invoice has to be definitely generated.
Moving on to the next question. What documents needs to be maintained for GST compliance by a small retail shop owner who has a turnover of 40 lakhs?
Okay, so this is the basic question. So if I'm a registered taxpayer, so when it comes to the GST perspective, so there is no specific classification telling for the small retailers or if it is a large multinational company. So whenever, if you are a registered taxpayer, you must maintain the set of documents prescribed under Rule 56. So whenever, if you are a registered tax person, you should maintain all the books of accounts. You should maintain the stock registers. You should maintain the details of if you have advance receipt, that also should be maintained. If it is tax payable, that has to be maintained. All the bill of entries, all the invoices, delivery challan, everything has to be maintained by the registered person. So if you are a registered person, all the set of documents that will be applicable will be maintained by you, even if you are a small retail shop owner.
Great. So the next question is, sir, we are giving job work. While receiving the goods, the e-way bill was given by job worker for labor cost alone. Is it correct?
Okay, so this is an important question, I would tell. So for an ITC 04 or whenever you are sending the goods for the job worker, whenever you're sending the goods to a job worker, you will be raising an e-way bill along with the delivery charge. In the e-way bill, you have to prescribe the goods that you have sent. This is the first step. So whenever there is a job worker does a job work, he'll be raising you a invoice that will be for the labor cost. But the job worker has to return the goods back to you. So whenever he is returning the goods back to you, he has to raise an e-way bill. But this e-way bill has to be for the goods portion. So from the practical perspective, the job worker will be raising an invoice for the labor cost. But you cannot raise an e-way bill for the invoice raised by the job worker for the labor cost. So when the job worker is returning the goods back to the principal, he has to declare the value of the goods, that is the materials that which was received by him, that will be sent back to the principal. So to put it very simple, whenever a job worker is returning the goods back to the principal, he has to generate an e-way bill. In that e-way bill, he has to mention the details of the goods and not the labor cost.
Hope the answer is clear. Moving on to the next question. Notice was issued to prove the goods were actually received by the recipient. The seller has declared that the sales was actually not made. What are the documents required to prove that goods were actually received to the GST department? We have the purchase copy, transport copy, and e-way bill. Is it enough?
Okay, so this is, I think you must have received the notices recently, because recently we have been receiving notices telling us to prove whether you have received the goods. So under Rule 86A, we have been receiving notices telling that you have not received the goods. Without actual receipt of goods, you have claimed the ITC, but the supplier has become non-existent or he has not paid the GST, for which you will have to reverse ITC. So this question is particularly dealing with that. So, so here you are telling that the supplier has declared that sales is not actually made. But what are the documents required to prove goods actually received? Okay, whenever you receive the goods from the supplier, normally you will be having the material inward register, or you'll be having the PO copy. And whenever there is a receipt of goods, the e-way bill will be generated by the supplier, or you will be raising an e-way bill. So to prove to the department, you must submit all the details, or like what are the documents that you have to prove that you have received the goods. That is mainly e-label, material inward register or PO, the invoices, everything. You'll have to take it and you'll have to go to the department and you should convince them. But in certain cases, if the supplier has become non-existent or if they've not paid the tax, as far as we have seen with the department officials, they will be asking us to prove. If we are not able to prove that, we'll have to make the payment. Even though you have made the payment to the supplier, you should make the payment to the department again, is what their contention. So let's make it very clear that the supplier files the invoice in the GST return. If they are not declaring under GST return, then it will be our burden and we'll have to prove that we have received all of the goods with all the valid documentation that we have.
Hope we've answered your questions. Now we'll be taking up some questions from the live audience. How many credit notes can we raise in a month?
Okay, so how many credit notes, sir? There is no specific limit for raising a credit note. So whenever there is a supply and there is a return of goods, if credit note has to be raised, you can raise a credit note. So there is no very particular criteria telling that so many number of credit notes only has to be raised.
All right. So the next question is, when we return the goods to the supplier, whether we need to raise the debit note or raise the invoice at the same price, because most suppliers prefer invoices instead of credit note or debit note. Is it correct approach? Please advise with section or rule.
Okay, so sir, as we have discussed earlier in the GST regime, so whenever there is a return of goods or whenever there is reduction in the amount of supply, credit note has to be generated. So even if the supplier prefers invoices rather than credit note, whenever there is return of goods, credit note only has to be raised. So that we can be very clear.
All right. Going to the next question. Is there any difference in ITC between 3B and 2A or 2B? Can we collect declaration from the vendor for the reason of difference as per the circular 183 of 2022 and 193? Till which year we can collect and submit to the GST department?
Okay, so I can see the questions. It's not relating to documentation, but then you have asked about the differences in 3B versus 2A. So this is one of the basic, one of the most sorted GST query, because we've been receiving notices recently telling that you have claimed excess in GSTR 3B when compared to GSTR 2A. So in that case, yes, sir, as you have rightly mentioned, we have the circular number 183. So circular number 183 specifically talks for financial year 17-18 and 18-19. So that circular specifically tells that if you have availed ITC based on the invoices that you have, you can get a certificate from the supplier telling that they have shown the invoices in GSTR 1, but they have not rightly shown in GSTR 1, but they have paid the taxes in GSTR 3B. So circular number 183 specifically was the year 17-18 and 18-19. So whenever you have the invoices and you possess all the valid documents and the conditions of section 16 subsection 2 is completely fulfilled, yes, you can take the benefit of section circular 183, and you can possess and you can submit the supply certificate. In case of circular number 193, so 193 will be for the financial year after 18-19. So 193, if you see, it will be providing as a clarification regarding like how much of the percentage you can claim ITC in excess of GST 2A. That is this 20%, 10%, and 5%. Came with the circular number 193. But even though we have this concession of this 20% or 10%, the department officials are specifically asking for the supplier certificate. So even if you have invoices and all of the valid documents based on which you have claimed ITC in GSTR 3B, you must be supplying the supplier's certificate as well.
Hope we answered your question, sir. The next question is, We purchased goods from supplier. We availed ITC based on 2B in financial year 1920. Now the department has issued notice to us to pay the input tax because the 3B has not been filed by our supplier.
Okay, so this is the what I could say. This is everyone are facing this issue, because if you see for the earlier tax period 17, 18, 18, 19, you would have taken the credit based on invoices that you have, but later on only you'll be realizing that the supplier wouldn't have paid the GST under GCR 3B. So in that cases, so as long as we have seen the department officials particularly ask you to pay the GST amount, or they ask the supplier to pay the GST amount, because for them from the government perspective, they have not received the tax. So even if you have paid the supplier and the supplier has not shown in his GST returns, then the burden comes to us. So in this case, we can try convincing the department officials, but then on a major or from a larger perspective, the department officials will definitely ask you to pay the GST in this scenario, sir.
Moving on to the next question.
So I think the same person has told the supplier close GST. Yes, sir. Even if the supplier has closed the GST registration, we'll have to prove ourselves that we have received we have taken the ITC on all the valid documents that we have. Maybe we can try convincing the department that when the supplier is active, or whenever his registration is active, only we have received the goods, or we have made the payment. Based on that only we have taken the ITC. We can try convincing the department based on that aspect.
All right. So we'll be taking up more questions. Do put up your questions if any of you have any further queries. Okay, so we've got a question asking, could you please explain about the issuing of credit note for discounts in detail?
Okay, for when it comes to discount, and when it comes to credit note, as I've told you earlier, so there is a concept of financial credit note or commercial credit note and GST credit note. So to give an overall picture, the financial credit note will not have the GST portion, and the GST credit note will have the GST portion. So whenever a GST credit note is issued, it has to be shown in your monthly return. And whenever there is a financial credit note, it is not necessary that it has to be reported. So when under what circumstances a financial credit note will be issued, and under what circumstances a GST credit note will be issued. Say if discount is offered to you and you have prior agreement to that, we can split it into two, telling that there is a prior agreement to that and there is no prior agreement. So when there is no prior agreement and you have been offered a discount, the supplier will be issuing only a financial credit note. So that is very clear. So whenever there is a prior agreement, and if the supply is and if the discount is given to you at the time of supply, or if it is given before the time of supply, we'll have to check that. So when it is given at the time of supply or before the time of supply, if the ITC is reversed by the buyer, then GST credit note will be issued. If ITC is not reversed by the buyer, then the supplier will be issuing the financial credit note. So this is an overall view about the financial credit note and the GST credit note. So when it comes to discount, it is all about the valuation. So section 15 subsection 3 talks about the value of supply in case of any discounts. So if you have any further query relating to the discount or how it has to be treated, or if you have received any notices relating to a discount, you please contact us, or you can post a message in our phone number or mail as well. We'll be ready to answer you.
Hope we've answered your question. So the next question is, so we've received few questions through our WhatsApp. One such question is non-payment of creditors for more than 180 days. From which financial year is it applicable?
So ITC with respect to this 180 days, sir, it has been from the existence of GST. So it is from the financial year 17-18. So if you have not made the payment within 180 days, the ITC has to be reversed on that.
Okay, we'll take up one final question since it's 4:15 already. The question is, reverse charge is applicable to freight alone, or is it applicable for other expenses as well?
Okay, so when it comes to reverse charge is not applicable only on the freight charges. So as per the notification 13/2017, we'll have the list of services for which reverse charge will be applicable. Say reverse charge will be applicable for security services, for advocate services, and so on. So if you see that notification, you'll get an understanding like for what all the services reverse charge will be applicable. So it is not only applicable for freight.
So as we've mentioned, okay, so sorry for the interruption. As we've been mentioning, please post your queries and all your unanswered questions through to our mail ID solutions@zentaxclinic.com or WhatsApp to our phone number. We'll be happy to solve all your queries, and also do let us know how the session went. And thank you for all being patient and attending the session throughout.
Thank you, everyone. So it was lively webinar where we could answer all of your questions. So the questions were very practical, and it was very good answering to all of the questions. So if you have any issues relating to GST notices, please do contact us. And if you have any queries also, we'll be ready to help you. You can contact us through mail or through WhatsApp. And please do provide feedback based on how we can take the future sessions. If this Q&A session is it's helpful for you, or we could go with a webinar, or if it is webinar, like what are the specific topics that you need us to get addressed. So please send us your valuable feedback. Thank you each and everyone.